What level are you at as a property investor? Because you're about to learn the 7 levels of property investment from level 1 all the way up to Mega Landlord. But while climbing through the levels, you are going to come up against challenges that stop you in your tracks, which is why in this episode, you'll start by learning what happens at each level of property investment and how many Kiwis reach each stage. And once you know the challenges you need to overcome and how to do it, by the end, you'll know exactly which level you're up to and what your next move could be.
You know, I was walking out of the gym the other day and a young guy says to me, Ed, I watched one of your webinars. I'm 24. Should I invest in a house that's going to go up in value faster or a house that has a better cash flow? And I was kind of saying to him, oh, mate, you're 24. Most people at your age tend to go for a growth property because you've got a lot of time on your side. But then I thought, most people don't actually know, this is as I'm driving away from the gym, most people don't know where they are within their investing journey or what their next step looks like. And I suppose that's why I wanted to put together the 7-step roadmap for property investors based on where they're up to, right?
Yeah, and this is based on years of working with thousands of Kiwis. There are kind of 7 categories or levels that people fit into, and each level's got like a clear phase and a goal that you're trying to achieve. And once you've achieved that goal, then you graduate onto the next one.
Okay, so it starts with level 1, which we're calling the learner.
So let's talk about level 1. So the learner, this is where you're kind of learning the rules of the game. And you, generally speaking, you don't own your own house yet, and you're wanting to figure out what it is that you're trying to achieve out of property for you and what you're going to look for in a property. And this is where everyone kind of starts. No, you know, when you haven't got an asset to begin with, you haven't got your house to begin with, whether it be an investment property or an owner-occupied property, you have to kind of learn the rules of the game.
Now, you could be in your 20s, 30s, maybe even older. You could be 12 years old and start learning the game. But what is your main challenge at level 1?
The money. So you need to kind of have a deposit to begin with. And that could come from a number of different sources. It could be things like your savings, your KiwiSaver, the bank of mum and dad, all of these things, and figuring out how much you're going to need to have before the bank's going to give you some money so that you can combine those things together and go buy a property.
I think there are 2 things though. The first is you don't know what you don't know. So the first stage is you're in the learning stage. You got to learn as much as possible. That could be by binge reading a couple of books or some podcasts. And then the second part is really getting that clear idea of how am I going to get to the point where I'm able to purchase that property. But if we think about how many people start in level 1, it's everybody in New Zealand. It's all 5.3 million people. So if you're watching this, you're at least at level 1. You could be even higher. Level 2 is what we call the starter. And this is where you buy your very first property. And this is where it gets pretty exciting, but also where a lot of Kiwis get stuck. Now, if you're buying your first home and you've bought it, it could be one for you to live in, could even be your first rental. And I think your challenge here, once you've got that first property, is to overcome the fear of getting it wrong and that feeling of uncertainty about what you should do next. Now, to graduate to the next level of property investment where you're buying your second and third property, you're probably going to need to talk to a mortgage advisor to find out, well, what do you need to do next in order to get ahead? It might be that you've got to build some more equity within your property. You've got to pay down the mortgage. You've got to wait for house prices to rise. Might be that you need to talk to a non-bank lender. It might be that you need to get your income up so that you're able to take on that mortgage. But at this point, you've bought your first property. Your wealth might be somewhere between 50 to 150K because you've got some equity within that property. And about 2.1 million people end up at this level in New Zealand.
So we've already cut out half of the people, give or take.
Well, it's because if you think about 5.3 million people in New Zealand, some of those are 12-year-olds or 6-year-olds who aren't at the stage where they're buying yet.
Lazy.
And if at any point you want some help moving from whatever level you're at now to the next step in the ladder, that's where working with a financial advisor can really make a big difference. And at our company, Opus, we offer a free portfolio planning session where you bring your numbers and our advisors will help map out what your next step is to get to the next level. I'll drop a link down in the description where you can book that. But what is level 3?
So level 3 is the Strategist. So this is your first investment property. So some people do skip level 2. They don't buy their own house. They end up just going straight to level 3 and buying their first investment property. And we call that rent vesting. So they carry on renting and then they buy their first property as an investment property. That's what Ed and I both did. But most people start by buying their first home and then using that, the equity in that, to buy their first investment property later on. Now, at level 3, there are a few challenges to overcome. Now, number one is if you do own your own house and you need to use your equity as your deposit for your first investment property, you might find that you don't have enough equity to begin with, particularly if you've, borrowed a high percentage of the purchase price for your own house. You might have borrowed 95% in some cases. Maybe you've got to pay back mum and dad first before you are able to unlock some more equity because that's what they've asked you to do. But either way, you're probably going to be challenged again around the equity side of things. And the other part to it is mentally, you might be a little bit stressed about taking on more debt. Like, so if you think about, you've bought your first house, you've been diligently making your $800 a week payment towards that. The idea of then taking out an even bigger mortgage and maybe being responsible for that if the tenant doesn't pay, that probably can get in your head. Now, to graduate, generally speaking, what you need to do is pay down more of your own personal mortgage to unlock the equity, or maybe you can find a way to increase the value of your house by doing renovations, and particularly, handy people might be doing that themselves, or you might need to find a way of boosting your income to make sure that the bank will lend you additional lending. And if we think about the amount of wealth that Kiwis would likely have at this level, probably somewhere between 150 to 400K. And to have one investment property, well, Velocity kind of estimates that to be about 500,000 people.
Cool. So 530,000 people get to this level, whereas 2 million people get to the level of buying their own home. So then we come to level 4, which is the builder. Now, the builder is where you have 2 to 3 investment properties. So what's happening at this stage?
So by now you've bought a couple of properties and you're starting to feel like a real investor. You might be saying things like, the bank's not going to lend me any more money at the moment because I'm rent reliant when I apply for a loan, or my mortgages are still really large, or I thought my cash flow would improve, but it hasn't. You might be topping up those properties. Each of them might be costing you $100, $200 a week. And this is when you start to think about, okay, how do I optimize my structures? How do I make sure that, maybe my investment loans are on interest only to improve my cash flow? Maybe you use split banking to free up more equity because if the bank's got all their hooks on all your properties, it's probably going to limit the amount you can borrow against them. And in terms of being able to graduate, that's when you are using those more sophisticated structures like split banking, where you have different properties at different banks. Maybe you're using the mortgage buster strategy, which is where you use surplus cash to pay down your own mortgage much faster and again, create more equity for you to borrow against. And probably here you need to be more strategic, not relaxed, around making sure that your rents are keeping up with the market. So if there is the opportunity where your rent isn't in line with the market, you are increasing that so that the bank will see your application as more favorable when you go to ask for more money. And I think that this is where you really need to make sure you do have a good team on your side. So particularly around the mortgage broker, that's going to be your most important professional at this stage. Now, in terms of the amount of wealth that you might have at this stage, Kiwis that reach this level, you're probably talking between that 400 and maybe a couple of $1 million worth of equity across 2 or 3 investment properties. And the number of people that probably reach this level, about 116,000.
Don't you think? I mean, there's 2 ways to look at that number. 116,000 Kiwis own at least 2 to 3 investment properties. Now, on one hand, you could say, well, that's a very small part of the population. That's probably about 2%, just over 2% of Kiwis reach the point where they have 2 or 3 investment properties. Maybe that's not that many. And then you say, well, that's 1 in 50 people, right? That's actually not that bad. That starts to make me think that's achievable for some people to get to the point where it's, 2 to 3 investment properties. Maybe I could do that.
It's pretty significant.
And then in terms of the number of people?
Yeah.
I think so. And then you get to level 5, the operator. So this is where you've got 4 or 5 investment properties. And when you stop being a property owner and start becoming more of a portfolio manager. Because if you've got 4 to 5 investment properties, that could be well over $2 million worth of property that you have invested in, right? Now, if you owned a business where you were investing in $2 million worth of anything, you would think that that was like a pretty significant investment. And so the next move really means you've got to be more strategic. Again, your challenge is going to be that everything gets too complicated to manage yourself. The tax and the legal stuff are getting messy. You need some proper structuring. You might be thinking about trusts and companies if you haven't set it up the right way. And it does get harder and harder to get the loans. Now, to graduate, what you've got to do is realize that's normal. It's a sign that you're growing and you are well beyond the DIY stage now. You really need to have a team behind you. Know who your lawyer is. You might need a professional trustee on your trust if you've got one of those. And you might like to start exploring non-bank lenders if the usual banks are saying no. But this stage is about getting your structures right, your trusts, your companies, deciding which loans are with which banks. And actually, in terms of the number of people who reach this stage, it's a lot smaller. Only 32,000 Kiwis have 4 investment properties or more. So we've gone from just over 2% of the population to less than 1%, about 0.6% of the population own 4 investment properties or more. In terms of your wealth, it might be $1 million plus at this point, because you're going to have to need some equity within those properties. And this is actually where we try and help get investors to on the show. I mean, whenever I start the show, I say that we help Kiwis get from 0 to 5 investment properties so you can be financially free. And this is the point where we're trying to get some people. But it is important to say that the goal isn't necessarily to keep climbing the ladder. And if you don't get to level 5 of property investment, you're a loser. That's not what we're saying at all, right?
No, because if your goal or your view of what you want to achieve is to get financially free in your mind or on your numbers, if that requires 1 property or 2 properties or 3 investment properties, well, that's the destination you're aiming for. It's kind of like someone the other day used this analogy. I quite liked it. Imagine that you're going to a restaurant for lunch and you punch it into your Google Maps and you follow your road there and you get there and you stop and you go and have a wonderful lunch. Well, that doesn't mean that that's the end of the road. That's just the end of the road or you.
Yeah, the road keeps on going for miles and miles and miles. You could have kept driving, but what was the point? You already got to where you were going. And I think that's a really good analogy when we're thinking about investing, because there is a danger in over-investing and over-saving. And the danger is that you stop enjoying life because you keep on putting away, taking on more risk and putting away money that you otherwise could spend. And so this isn't to say that you need to get to level 7. If you want to stop at level 2, 3, 4, wherever you want to stop because you're quite happy, if you want to stay in level 1, that's fine. It's your decision. But this is the kind of levels that we see. And then we get to the final 2 levels. Level 6 is what we call the free agent. This is where you've got 6 properties or more.
And this is where most people find that actually, after a while, you can stop working and you can semi-retire or you can fully retire. Maybe not straight away, because when you buy properties and you're scaling up your portfolio, you tend to do that with a lot of debt, and it takes a while for your properties to go up in value, your rents to go up in value, and you're not actually putting any of your own money in anymore. So you're probably still working to be able to sustain that. So the goal, though, here is to replace your day job and your income with some of the cash flow from your portfolio. Now, if you've got somewhere between 6 and 10 investment properties, at some point you're going to sell half and pay down the other half, for example, but you are still going to have some challenges. Now, one of the big challenges is, well, when do I do that? And what do I sell to be able to do that? And what do I keep? Because you've got to figure out, well, now I've gone from caring about how much growth I'm getting because I want to pay down the debt and I want to have money, to how do I actually produce as much juice from the fruit that I'm actually squeezing to be able to enjoy my lifestyle. Now, that's where you need to have a more sophisticated, what we call decumulation plan, where you're doing a portfolio review and you're shifting your mindset from acquiring assets to go up in value to now optimization and cash flow. Now, in terms of the wealth that you might have at this stage, probably somewhere between $3 and $7 million. And again, that's going to be 6 to 10 investment properties. And the data gets pretty hard to estimate the number of people here, but we estimate around 15,000 people get to this level.
And it's quite funny that when you are at those earlier stages, a lot of people are just thinking, how do I buy more? I just want more and more and more and more and more property. And then you get to the point that you've got 6 properties and you think, what do I do with them now?
And how do I make it easy?
Yeah, and how do I make sure I actually am able to live that retirement? And that's where the challenges really are quite different at each stage. You know, moving from level 1 to level 2, you know, buying your own home to then buying your first investment property, that often is quite simple in terms of the structures of it. The issue is getting the equity. Once we get to level 6 and level 5 and 6, the issue isn't about whether you can buy your next property. You'll be able to at some point, highly likely. But it's about having the structures right and making sure that we are moving towards that retirement plan. But level 7, the final level, is what we call the Mega Landlord. This is where you've got 10 investment properties or more. And now you're asking, well, can I actually live off this thing for good? Now, you are going to have some challenges. You're going to want to keep more of what you earn. And so you're going to start thinking about tax and talking to your accountant about this. You're also going to be thinking about, well, what happens when I die and all of these properties are around? How do I pass that on to the next generation? And the other thing you're going to be considering is, well, how do I make sure that I get 12 months of consistent and stable passive income? And this is where you are going to be setting things up for your kids and your family so that you've got your sense of purpose. Now, only about 0.1% of private landlords own 10 or more properties. So our best guess is that around 5,300 New Zealanders own 10 investment properties or more. And at this point, you might be in the top 1% of New Zealanders. So your wealth might be $7 million or more, depending on how long you've owned these properties. I mean, some people will own 10 properties fully leveraged and not have any wealth in them. But this is typically what we tend to see. And the one thing that I really want to say is you don't need to climb every rung of these levels, but people often ask us, well, could you sketch it out for us? Could you explain the different levels so I understand where I'm up to, some of the challenges I might face and what I should do next? You don't need to own 10 properties or even 40 properties. You might only need 3 or 4 to achieve your financial goals if you do it properly. And at some point, you can stop climbing and just let time do the work, because that's when property investing tends to pay off.
So now you know which level you're at and what it takes to reach the next one. But if you're at the start of your journey, you might be wondering if it's even possible to build a portfolio, which is why you need to watch this video, where I break down exactly how to use one house to buy 5 more. Click the video on screen and watch it now.